All right, guys, let's real quick. Let's just go over quickly liquidity sweeps and retracements back to levels, or if an area of liquidity is swept, where are you going to take profits, right? This is a higher time frame ES chart. We're looking, it's a 5-minute chart, but it's a higher time frame. We are trending up, right? Higher highs, higher lows. We got liquidity levels on the 5-minute here marked. Liquidity levels are just looking at like the swings, right? And the reason why they're liquidity levels is you're going to need to take out some of these levels in order for a higher time frame to retrace and occur and get the next move up. So obviously we have yet to take out this level. We make highs, we pull back, we make highs, pull back, right? You can see market structure is coming up here. You have your move up, your move down, your moves up, your moves down, moves up, moves down, right? Now there we go. Now you can see it nicely, right? What did we just do? We swept the liquidity down here on ES. We swept the liquidity on ES. Where's the next? You want to say, okay, if you find a long setup here on ES below this liquidity, because you have the sellers shorting here. You have sell stop orders shorting here, and you have buyer stop losses here. What happens when this area gets hit? You have weak-handed buyers that are putting their stop losses below the previous swing on a 5-minute, right? Or a 1-minute, whatever chart you're looking at. When those buyers' orders get hit, they enter the opposite direction as a market sell. On top of that, you have breakdown or breakout traders, momentum-based traders putting sell stop orders here, and they just fail, and then price continues, right? So let's say you came in long here based off of some sort of reversal setup you see on a 1-minute or a higher time frame. From there, where is the next logical level to take profits, right? You got your short-term swings here, right? If you want to go ahead, you want to start taking off there, but we V-bottom and we're going higher. Right? Let's say you're still in, you're holding a runner. Where's a logical level where you should have the majority of your profits off? The last attempt of the buyers, or the area where the breakdown occurred. So right here is where the breakdown occurred. So I was watching this level. This is the 60.27 level that I was watching. You go to the 15-minute chart. And the reason why I do this on a time chart is because it's the best to correlate it for liquidity sweeps. Not a 15 range, a 15-minute. For liquidity sweeps, as you can see, clear liquidity sweep. And where do we come back down to? A 15-minute fair value gap, or the breakout retest level, right? If I take this and I put this on we'll do a 2000 tick chart. And this is the reason why I use tick charts for the entries and stuff. You can see this is like the last area. This is where the last area of buyers trying, and then it failed, right? Because look at this. Look at this. Clear, move up. They tried, and then they failed. So this correlates on a 2000 tick chart, or the tick charts, to the BORT, what I call a BORT, breakout retest, right? This is the breakdown retest level, and it's also on a 15-minute chart a fair value gap, right? So if you were trading for this liquidity sweep higher, this is a good area to take profits. On top of that, why does this liquidity get swept, right? The best reason for why this liquidity gets swept is you have a 5-minute time frame structure here, right? Does the market trade based off of only 5-minute structure? No. Markets trade off of higher time frame structure as well. So this very well could be a higher time frame structure forming right now. Not saying it is, but this could be a higher time frame structure. See that? This could be a higher time frame structure. This is why zooming in on these smaller time frames and thinking these levels are going to hold, and placing your stops below some of these smaller, faster time frames, the 5-minute, the 1-minute, etc., it's going to cause you some issues, right? This is a 15-minute. It broke this level on the 15-minute. I'm sorry, this was a 15-minute chart, but either same difference. 5-minute, 15-minute. We swept. We come up here. Now we're expecting some sellers to come in here to try to bring price down. Because why? We have structure forming on a 15-minute chart. We have structure forming here on a 15-minute chart. Structure. Breaking above here, and holding above here is beautiful for the continuation, right? If you're not already in, wait for the failed value gap, wait for that breakdown retest level to hit. Maybe you can come in long here, and then you'd have to break here, hold, and then continue, right? Just basic market structure, liquidity sweep, and where your target should be on that. I know I posted the 60.27 level was what I'm watching ultimately, and that's pretty much it. You know, don't maybe the 36 above there, but that's high a day, so you know that would that could happen. But we are back inside of the London zone here on ES. So I did want to post a little ES chart, same stuff on ES as NQ, liquidity sweeps, breakout retest. This one so happened to be also a 15-minute fair value gap, so you know shorts are going to be coming in here. Profit taking is going to be occurring here as well. As you can see, that was the last area where the buyers came in before we dumped down, right? All right, guys, so that's ES little analysis right there.